Alrighty, so I want to preface this whole conversation by saying what I'm about to talk about right now is hopium for the situation that we did just see on September 7th, that is, with that nearly, or I think a little bit over $10,000 move for Bitcoin. Again, this is hopium. This is certainly unconfirmed, but I would like to talk about a few things that I'm seeing in the charts right now, that I do think are of relevancy if you are perhaps looking for a bit of hopium, or if you're perhaps looking for some reason or some sort of technical reason to maybe still be considering a bit of a bullish situation right now. Now, I want to say with this at the outset, I would not be calling a bear trap in this situation at all whatsoever from a technical reason, as long as Bitcoin is below 49.5. It is just simply another lower high, or even if you want to be super conservative, 50,000 bucks. As long as Bitcoin is below that level, especially on a daily closing basis, it's just another lower high, and the reversal is real, and you can expect much lower prices. Anyways, with that said, I'm going to bring it back on over here to the weekly, and I will be showing a bunch of different things right now, starting off with the weekly yellow 21 exponential average, which I'm going to get rid of the 200 simple for right now. Anyways, what do we see right here? Well, obviously, over the long period of history, everyone knows this meme with Bitcoin, right? Where Bitcoin loves to play off the 21 exponential average in its bull markets, as long as price action is opening and closing above it, as long as it also has a positive slope, that is essentially your bullish market. And you'll notice that we are just testing into it pretty much evenly yesterday. Now, it does have an ever so slightly positive slope for right now, but what I'm going to show you next is going to dial this in a little bit more. So I'm going to put on my drawing tools right here, and you'll notice that I've marked off all of these areas with a red arrow. That's very interesting now, isn't it? Because you'll notice that if I zoom in on these areas, they all actually happen in September or around September. Just as an aside, I don't really care too much about cyclical analysis, but it is of interest right here. So we have this one on September 11th in 2017. Very interesting. Bitcoin spikes down directly to the yellow 21 and bounces off. And by the way, this was from open to close about a 20% move to the downside, and I'm just curious to see what it was like on a wick basis, about 40% to the downside, actually. Interesting, just something to keep in your mind. And we see this one over here in 2013, right? September 2013. Again, happening at the end of September, to be fair, but we do see a nice spike down, just kind of out of nowhere, actually, to the 21 right there, as you can see. And I'm just curious, how much was this one as well? From top to bottom, about 26 and a third. Okay. Interesting nonetheless. And then we have this one way back on over here. This one actually more around October. We actually see two spikes down here in late August and then late October. So we can just average that out into September. No, that's not how it works. But this one obviously a little bit different, to be fair. But spikes down to the 21, and from high to low, what do we see right here? We do see about a 30% move to the downside right there. And if you do look at this one, this one was pretty much like almost immediate as well. About a 45% move to the downside right there. Anyways, you'll notice not only, of course, are we in early September right now, we're on September 8th for the time being, you will notice that Bitcoin has spiked down exactly to that level. Very interesting, right? Okay, well, not just that, but if we go back into it, let's see how much of a percentage drop this has been. Is it relevant to the last few times? Thus far, it actually would be a little bit of an outlier on the downside situation. It would be about 20% right now. And of course, if you do wick lower, if we were to go much lower than the 21, then it kind of destroys that narrative anyways. That'd be a little bit of critique on it, obviously. But what I'll also show now is all these Fibonacci retracements, right? So what I've done, or sorry, not Fibonacci retracements, but Fibonacci extensions. So I've drawn a Fibonacci extension for all of the past cycles in correlation with these red arrows. And basically what I've done is I've taken the high to low of that cycle and then plotted an extension on it. Very, very simple stuff. Anyways, you'll notice going all the way back on over here on this extension from the beginning at 2010 to 2011, you'll notice that Bitcoin did put in the lows at the 21, which was right in line with the 1.618 extension. Very interesting. We see the same thing in 2013. Well, I did the same thing over here from the high to the low. And what do you know? Where do we put in our spike low right here? I marked it off with this horizontal, by the way. That's at the 1.618 extension as well. Rather interesting. And I did the same thing for 2014 to 2015. And where do we find the spike lows in September 2017? Right at the 1.618 extension. Once again, rather interesting. And where have we found the lows thus far on this current move? Well, here's the 1.618. We're pretty much right around it, actually. In fact, it's a little bit harder than that, obviously, if we really dial it in. Right around there. And that is where we have put in that spike low thus far. Interesting. Okay, well, let's line that up with one more thing as well. What I'm going to do is I'm going to put on some indicators here, and I want you to focus on the vertical blue lines, all four of them. And you'll notice something of particular interest as well, perhaps on the weekly RSI, right? The weekly RSI during all of these times was in a rather similar area. It was right below the edge of the bullish control zone. somewhere between about 62 and mid 50s or so. See this first one right here, that's your October 2012, and that was 58. See this one over here, September 2013, that was about just under 60. We see the one over here in 2017, that was just under just around 62. And then we see the one more recently. This one's a little bit lower, to be fair, but still holding the 55 area right now. And of course, we do need to see closure on this one as well, because this one will respond to current price action. So when we do come into a Sunday closure at 8 p.m. Eastern Time, I would be looking at something like this just to see. On top of that, do we have anything to be aware of with other indicators over here, namely volatility? Actually, I haven't done this analysis just yet, but I'm curious to see if we do, just to know. Anyways, okay. All right, I'm starting to see something of particular interest. So I'm on a daily now, and I'm looking at BBWP. And you can see that on the 2017 iteration right here, BBWP was rather low. It was certainly below 50 percentile, which is considered contraction. And the moving average was also angled down as well. When it went into expansion, that actually was when you got the test down to that region, again, on the blue vertical line. And expansion after that came with, well, essentially just a higher low printed on the weekly. Do we see the same thing in 2013 as well? And again, I've not back tested this, by the way, just yet. I'm actually doing this freehand right now. Well, rather interesting right here as well. Contracting all the way into it. First move expansion, yes. But after that, moving average catches onto it, gets positive slope. And obviously that was your next weekly higher low as well. We can come over here to this one as well. This is going to be your 2012 one. And same shit. Contracting all the way through. Starts rising up into the dump. And then, well, that is the lows on essentially the weekly before moving upwards and onwards. Do we have another example other than that? No, I think that was it. Yes. So a few things of note right there that I do think are relatively interesting, which I'll do more analysis into in the coming, in the coming week or so. But just off the top of my head right now, I would be looking at that as, something to be aware of right now. Now, of course, like I did say, or actually there's one more thing that we can get into as well. So is there anything else that we could maybe potentially use that would help, round out the statement? I'm going to put on both a 200 simple moving average and also a 377 exponential moving average. The white is of course 200, and the blue, is it not on right now? It doesn't look like it's on right now. Let me see if it's on over here. That's the problem. There we go. And the blue is going to represent the 377 exponential average. Okay, so the 377 is not going to show anything, so that is actually irrelevant. I'm going to get rid of it for right now. I thought it might, but it is not. Anyways, what we can see right here on the daily, throughout all those past iterations, is that into those tests, which I'll put back on right here just so I can visually see, Bitcoin tests around the 200 simple. You can see right here, never breaks it. Never breaks it on a closing basis. This one over here tests directly down to it. Again, does not close below it. This one over here tests down to it, does not close below it. And then, of course, if we go back to our current year, 2021, Bitcoin has tested around it. Yes, we have not closed below it just yet. And yes, we have gotten wicks below it before in the past as well. So if you do want a little bit of hopium, this would actually be it for right now. Would I put my name on this? Would I be saying that this is like something that I'd stand by immediately? I think it's interesting, certainly, but what would be the confirmation that this is actually going to play out in similar ways to the past in those sort of, macro bull cycles? Well, what I'd be looking for here is I'd be looking for, again, a daily closure, nothing less than that. Maybe you could use a 12-hour, but I'd raise up the price towards $50,000, but about 49.5. If we see something like that, I would start to really consider this a bear trap, and I would be looking for this one to very likely kind of grind its way out of its current slumpy dumpies. Anyways, with that said, I think that is it for this one. Hopefully that was in some way interesting or helpful. And so I will see you in the next one. Take care. Alrighty, so this video is actually being recorded just after I had finished that live stream, and there's a few other things that I wanted to point out while I was doing some more preliminary analysis. Now, of course, over time, this will probably evolve, and I will add more to it if it's relevant. It could also be that by end of this week, we already hit the risk limits for what this is even possible for, and it's just completely irrelevant to begin with. But I wanted to point out a few more things before we go on our merry way, and that would be this. So again, I have a chart of Bitcoin right here going all the way back to the dawn of time in 2010, actually, the genesis, as you might say, and I've marked off all of the areas that we spoke about before with these not horizontal, but vertical blue lines. Now, with that said, I want to bring up a couple more indicators over here. This one, we're going to be focusing on the PMAR, which is essentially a measurement of how far away the current price action is away from a user-defined moving average. And in this case, what am I using? I am running a 20 period on a VWMA. And so what you'll notice right here is that this is actually coming down to some very, very similar similar levels. And this is, again, a volume-weighted moving average. So based off of something different, so to speak, and we still see that all these areas kind of spike into the same green line that I've added right here on those September, or in this case, from 2012 October dates. We have this one right here, spikes in, boom, rallies out. Spikes in right here in 2013 September and rallies out, of course, again as well. And we have this one over here in September 2017 as well. Boom, spikes in and out. And where are we right now? We're currently right on it, actually. And again, this will adjust as we do come into the weekly closure. So we would expect this to bounce from this current level, or around this current level, essentially, as we did see over here, as we did see over here, as we did see over here, taking effect over the next, on average, it looks like about 2 to 3 weeks for things to really get going. Anyways, with that said, I've also lined up the ADR over here, just an advanced decline ratio as well. You notice on these same spike areas, you'll very likely see a similar sort of concoction. Again, the vertical blue lines represent all of those same iterations. And where do we spike down to over here? The 1.25. Where do we spike down over here? Literally the exact same area. We go over to 2017 for September. Bitcoin's coming right off that current region. And then, of course, if we go to our current area right here, actually does not align with it. We actually have lifted off from that region about a week ago, it looks like, but perhaps relevant nonetheless. Anyways, the next two things that I'm going to show you are actually fundamentally based, of course, and that's going to be over on this chart over here. So what I'm going to first do is show you the Bitcoin stock to flow rainbow indicator, basically just putting the stock to flow into nice, easy to read colors. And what you'll notice is, or actually I should probably mark off those areas as well, what you'll notice is on the September spike low in September 2017 on the 13th, oh man, is going to bastardize it. Hold on, let's go over here. Yeah, there we go. That's a little bit better. Nice and fresh chart. Here we go. Okay, so here's your early September in 2017 spike low. And what do you know? We start to turn green on this indicator. All right, interesting, but not too much on its own. What do we see over here in, of course, September of 2013? It starts to turn green as well as Bitcoin puts in that spike low here too. Now we actually don't have the iteration prior to that, but it would have not worked on that one, or at least it would not have been consistent with these colors on that one, because obviously it was a little bit too new, too immature of an asset. But you can see over here on that same spike low, as we would be looking at, coming in on this one right here, actually 1 week prior to that, it's just starting to turn green as well. And these were all corrections before the last parabolic blow off top. In this case over here, this one printed about from bottom to top about too much. We won't even speak about that one right there. And over here, this one about 500%. I was just trying to see if there's anything particular about them. Doesn't really seem that there is. So that idea falls by the wayside. But let's take it one step further and let's put on what's called the Bitcoin investor, or sorry, not the Bitcoin investor tool, but the Bitcoin log curve zones. And again, what do we see right here? During all of these times, during all of these moves that for whatever reason happened in September, we do see that it bottoms out in the bottom of the yellow zone. You can see right here. And you can see right here as we literally just test right into the bottom side of it at about $42,000 and some odd change. Just interesting stuff that I've been looking at. Again, this is all secondary to the main analysis. At the end of the day, as long as Bitcoin's below 49,500 or so, especially on a daily, on 12 hour, I'd say about $50,000 even, then I am just looking at everything as a lower high before continuation to much more nasty downside targets, probably back down to the low $30,000 territory over time. But for right now, I just wanted to kind of beef up that case a little bit more. Some interesting things to be looking at. And with that said, I want to wish you the best, and hopefully this was useful. Take care and see you hopefully soon.